Hello and welcome to TNM TV News. I'm John Cumming, editor of the Northern Miner. This week, Mining Markets editor Alicia Hyatt speaks with Brent Cook of Exploration Insights. Cook shares his advice on investing in gold juniors like Gold Standard and Gold Quest and explains why he doesn't invest in big, low-grade gold deposits. He also talks about adding a new writer at Exploration Insights, Quentin Hennig, a geologist involved with Gold Canyon Resources and newly listed Yukon Junior Precipitate Gold.
Brent, the markets are pretty difficult right now, and a lot of investors have withdrawn totally from equities. Are they missing opportunities, or is it a good idea to wait until some of the global economic uncertainty resolves itself?
Well, I guess it depends on what they're actually selling, if they're exiting. I think now's a good time to sell everything that you don't know why you own, everything that's in trouble, in a company that doesn't have enough cash to last a couple of years, or a project that's of any value. That being said, I think it's going to get worse before it gets better, but I think opportunity is coming that's going to be as good as it was back in 1998, and that these stocks are going to get hammered, the good with the bad, and if you're very, very selective, we're going to make a lot of money, but there's no room for error.
You just brought on a new writer, Quentin Hennig, onto the newsletter. How did you get him on board?
I've gotten to know Quentin over the years. He's worked with a number of companies, Evolving Gold, Gold Canyon, and he kind of turned around the whole geologic concept of what these companies were doing or put the projects in. He's a very big thinker, outside the box thinker, and I like that. And going back to your first question, I think it's going to be a really, really good time to be getting involved in this sector, but there's no room for mistakes. And Quentin's going to help me evaluate these projects in the detail we need to do to know what we're buying.
Gold miners and junior gold miners are still underperforming the gold price. Do you see that resolving itself?
I think the majors are going to start. I think that we've seen the bottom more or less in the majors and probably the mid-tiers. That's probably the smarter place to be putting money right now. Because they will react quicker before people start jumping into higher risk things. I think the high risk sector is got some time to go before it resolves itself and bucks back up. And I don't really like to make predictions on that, but that's just what I see out there.
There's a lot of large, low-grade gold deposits out there being explored. What do investors have to keep in mind when they're trying to evaluate these deposits?
Well, there's two types. There's oxidized and sulfide. The oxidized are very simple deposits. I own a company called Lydian that's got an oxidized deposit. Basically what that means is the gold was tied up in pyrite or something like iron, and Mother Nature has weathered it, turned it to rust. When it turns it to rust, it liberates the gold, so it's very cheap to get the gold out. In sulfide deposits, which is most of the ones we're seeing in Canada and for the most part in Africa as well, you've got to build a mill to build these things. And they're both mineable situations. What you need to look for is continuity. You don't want a deposit that's very spiky and that you've got, 0.1, 0.1, 0.1, 25, 0.5, etc. That's not a good deposit. You can smear those grades across there, but that's not the deposit you want. So look for a deposit that shows good continuity, consistent, values across the width of the mineralization, and then consider CapEx. CapEx for these things, the sulfide milling ones, is $400, $500, $600 million bucks, and if you're only averaging a gram, your margins aren't that great. So what I'm looking for, I don't spend a lot of time on those. I mean, I do, but I don't own many of them or any of them, because I'm looking for high margin deposits, and I think that's what the majors are looking for. They need high margin deposits. Their average cost of production, all in, according to CIBC and another group, Dahlman Roos, is in the $1,200 to $1,300 an ounce. So I want to find a deposit that's going to give them a lower cash production cost. So that's what I'm looking for, is high margin deposits.
So did the IAMGOLD bid for Trelawney surprise you then?
I was surprised. I'll leave it at that.
There have been fewer acquisitions in the gold space than was predicted last year. Rick Rule said yesterday that he's expecting a big spike in M&A going forward over the next 18 to 24 months. Would you agree with that?
I don't think it's going to be that big. And I think there's a real reason behind this. What's going on in this cycle is there's no big scams per speak of, but what I'm seeing, I should say, and this is my opinion, is a lot of the resource estimates that are being put out, a lot of the preliminary economic assessments that are being put out are not really that accurate. And we're looking at companies, a number of companies you could point to and say, this is what their PEA says it's worth, this is what their net present value is, this is what the costs are going to be. But mining companies don't, they do their own due diligence. And I find, having worked with companies like that it's a lot more detailed, and that's probably why we're not seeing as many as we'd expect, is that bottom line, a lot of these deposits that appear nice, economic in a PEA, when you get down to the details, really aren't that economic. It's tough finding a real good deposit. It really, really is, and it hasn't gotten any easier.
Let's talk a little bit about Gold Standard and Gold Quest, two of your recent acquisitions.
Well, Gold Standard's on the Carlin Trend. It's a big alteration system. Big alteration systems can make big deposits. I like that. And the Carlin Trend, we know what we're looking for. We know what it looks like. They've pulled two holes that are, economic grades if they can string a deposit together. And those deposits are some of the richest, highest margin deposits in the world. So if they can continue to prove up that they've got a deposit, and it's not going to be easy. This is tough drilling. These are complex deposits. But if they can prove up an economic deposit of those grades, it's going to be extremely valuable, more than what it's selling for now. If they don't, this thing collapses. With Gold Quest, that's a bit different because we don't know the geologic setting. And I've kind of differentiated this in our portfolio between what's a real holding and what is sort of more of a gambling play. And Gold Quest is a gamble because although it's clearly part of a big system, we don't understand what that system is all about, what the controls are, and really we've got one hole. So it's moved, we had over 10 bagger on one drill hole. That's a little riskier, but the system looks good.
That's all for this week. Thanks for watching.